This podcast is entertainment, not financial tax or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Onchain, and should not be considered investment advice. Speakers often have personal, family, or business connections to Onchain, which may include direct financial benefits. Please see our disclosure at onchain.com/podcast.
Hey everyone, welcome to another episode of the Bitcoin Frontier. Bitcoin's moving fast, and sometimes the headlines don't tell the full story. That's where on-chain data comes in. It lets us really see what's happening under the surface. My guest today, James Check, co-founder of Checkonchain, has become one of the best in the space at interpreting that data. And so really excited to have him here with us today, talk about the state of the market. James, it's great to have you here. Thank you for your time.
G'day, Connor. Thanks for having me on, mate.
Yeah, absolutely. Well, I'm excited to get into it. James Check, many people online maybe better know you as Checkmate on Twitter, and you've built a really strong following, making on-chain data more accessible to the average retail investor. For those who may not be familiar, can you share a little bit about your background and how you first got into Bitcoin and what drew you to on-chain analysis?
Yeah, it's an interesting story. So my claim to fame is I bought the absolute top in 2017 on the advice of now co-founder, the other half of Checkonchain, Alec. So he's my best mate. He got me into this space. Now, we didn't understand Bitcoin, as no one does when you first enter the space. But the very first buy I had, Coinbase had an extra fee for Aussie dollars back then. And my buy, when I did my taxes, was actually above the top candle, above the wick. I'm like, you actually could not have bought a higher price than me if you tried. So that was quite remarkable.
That's worth something.
About markets. Oh no, it's an accolade, right? So I didn't know anything about markets. I didn't own stocks. I didn't own anything. So Bitcoin was the very first thing I bought. And through the 2018 bear, in many ways, in hindsight, I'm actually quite appreciative of being forged in the bear market. I didn't ride the wave up. I didn't get to see all the excitement. So it really forced me to not get hooked on number go up. There was something about the way that markets traded. And my background, I'm an engineer. So I'm a civil engineer by trade, or was. And specifically in my field, it's called geotechnical. So that was everything to do with basements, tunnels, mines, anything underground. So the really interesting thing about underground engineering is you get what Mother Nature gives you. You have very little information to make your inferences on because you only know what's down there when you've dug it up. Once you've dug it up, it's not down there anymore. And when you're working underground, that is the most expensive part of a project. Very, very rarely does a building fail because the concrete was no good or the steel failed. We know a lot about steel and concrete. What usually gets them is the ground was not what you expected, or you designed for rock and you got clay, or one of your footings was in the wrong spot. And when the ground goes wrong, if you can imagine, like we talk about the fiat system and the foundation being bonds, when your foundation's got a problem, your whole system's got a problem. And the knock-on effects are far more expensive to fix. So lots of incomplete information, lots of uncertainty, lots of risk. And markets, what are they? They're lots of incomplete information, lots of uncertainty, lots of risk. So there's something about those two fields that, at least in my world, just really worked. So I learned about markets, tried my hand at technical analysis, as a lot of people do, but I'm just trying to find a way to understand what's going on in the market. And finally, my portfolio of 10,000 shitcoins went from 10 grand to 10 cents, right? And then it got cut in half again at the end of the 2018 bear. And I thought, okay, I got to go back to first principles. And I finally read the white paper. So I read the white paper when Bitcoin was down like $3,000, 3,200, almost on the bottom tick. And then I was like, okay, now that makes more sense. And suddenly things started to click. Now, in late 2018, Coinmetrics came out with the realized cap, which in my opinion is actually one of the most important metrics of Bitcoin. It's like the on-chain market cap. Rather than valuing every coin at the current spot price, what we're looking at is every coin at the price when it last traded. So Satoshi's coins are worth $0. Early miners are worth, 10 cents, $10. Early investors, hundreds of dollars, and people who've hodled through the cycles. It's almost like you've saved the amount that you invested. If you buy a $10,000 Bitcoin, you've saved that $10,000 and it will remain saved there until you move it again. Now, that metric, by the way, that actually just crossed $1 trillion. So if you think about what that means, we've had $1 trillion of people working in their fiat life, taking that capital, saving it in Bitcoin. That's like it's like a measurement of when people saved their money. And that to me is an amazing metric. And it's the backbone of everything we do in the on-chain world. So there was something about this on-chain thing. I was like, okay, cool. This is another way for me to visualize where everyone's cost basis is, capital flow in and out of the system, how in profit and loss people are. And this field, like it really had to do a lot of learning and growing through the 2020, 2021 cycle. We had a lot of the metrics. I joined Glassnode in 2021 in February, so almost at the top. And basically, I've got this big toolbox of all of these on-chain metrics. And the reason they brought me on board is because we had all these tools, but we've never actually tested this stuff in a live fire exercise. We don't actually know what a lot of these things did. So I went down the rabbit hole of actually trying to use the market as a muse and really learn about how do we apply this tool? How do we actually look at coin days destroyed? How do we look at supply and profit? What does it mean? How does it change? So I built the analyst team for 3.5 years. And then in 2024, kicked off and started up Checkonchain to go out on my own. And really, it's just been a journey of working out what these tools do. And I've been saying for a long time that this is the first bull where we have the tools and we kind of have an understanding about what they do. We're very much on the cutting edge of trying to work out how the market changes. And at the same time, the market is changing. So we've got to be really flexible about all this stuff. But there's many insights here. I mean, on-chain data really at its core, we're taking the Bitcoin database, all the transactions, all the UTXOs, we're comparing how long they've been held, what was the price when they were acquired, what's the cost basis of this cohort of people, and when are they starting to spend their coins. So it's this like big mind map of where all the Bitcoiners are as told in the story of Bitcoin.
Wow. It's a really fascinating background. I feel like we could have an entire discussion just pulling on the threads there. I do, of course, want to get into your analysis on the market, but I want to keep going on that thread for a second because I always find it really fascinating when people that don't come from a financial markets background, like I started working in traditional finance and it feels like a natural progression to learn more about money. But you were in civil engineering, digging holes in the ground, and then you discovered Bitcoin. And so I'm curious, you read the white paper, sounds like it made sense. When did you start to make that connection of like your personal experience and like building a foundation on sand, making that connection with Bitcoin? And then a second question to that is like, when does on-chain metrics come into play? I've been in the space over 4 years now. And like, that wasn't like one of the first things that I was looking at, like, oh, this is where I got to start. That's like, oh, that's way too technical and smart for me. So like, how did you go from civil engineering to be a leading on-chain analyst without really spending any time in Bitcoin or finance?
Totally. It's not the transition that you don't think about this when you leave uni, right? And the funny thing was one of my earliest engineering lectures, it would have been like advanced mathematics or something. He started the class. He goes, look, this class, you're never going to use, there's two things I want to tell you. The first thing is you're never going to use most of this mathematics ever. The purpose of this course is actually to weed out all the people who actually don't want to get to the end of this degree. So you're going to know very quickly if you really don't want to be here. So that was the first thing he said. And he goes, and by the way, 30% of you are going to end up in finance. And I was like, I'm not going to go to finance. Why would I do that? I didn't understand anything about the financial world. My actual orange pill. So yes, I read the white paper in late 2018, but my actual orange pill, I think it would have been leading up to that. I was listening to Pete McCormack's podcast and he had this like 5-part series on Mt. Gox. And he's, you're just hearing about like, it was really the first time I got a proper lens into that 2013 and prior era. And the thing that just clicked for me, I was like, these guys of all, like they're a variety of characters. They're fighting tooth and nail with legal systems, with like capital, with whatever they can to get custody of those Mt. Gox coins. Like the lengths that these guys went to get them and have the ownership of it. I was like, what do they see? What is the thing that they actually click to? So that was part of my orange pilling journey. Like there's something special about this. I definitely started to develop, I was living in London at the time, and I started to develop a real passion for macro as well, macroeconomics. So once I found Bitcoin, once I understood markets, I started learning about more. And, you listen to the macro voices and all these like dry podcasts. I get my friends to listen to it. They're like, how on earth do you do this every week? I'm like religious. Every week I'll listen to these pods. So there was something about like the way the macro economy worked. And then you learn about debt. you learn about the governments, you learn about how fiat works, and you're like, oh man, like there's no question I'd be a gold bug if I wasn't a Bitcoiner and it didn't exist. So there's no question about that. So I think I was kind of predisposed. I've always been a saver kind of at my core. Now, in the world of on-chain data, I mean, I'm pretty sure I have the very first like masterclass module. It's me with my crappy $5-10 mic in London. Sounds like I'm sitting in a tin can explaining what realized cap is, NVT ratios, all these early metrics. There was this period, it would have been like late December, early 2019, where Murad, Dave Puel, Chris Beniski, a lot of these guys were just like inventing metrics. There was this like complete, like it was like almost like a gold rush. People saying, oh, look, we've got this. Now we've got the realized cap. Oh, look, now we've got MVRV ratio. Now we've got realized price. Look how the market trades around it. Suddenly we've got all these new NVT ratio comes out. So a lot of these things have been kind of discussed off and on. And I don't know, I just happened to be at the right place at the right time. I saw this thing come up. It just like tickled my analysis, the part of my mind. And I was like, you know what? There's just something here. And I literally downloaded PDFs and I would print these things out at work. And as we're in London, we're flying around, traveling in Europe. And every time we're on a plane, my girlfriend's like, what are you doing? I'm sitting there just poring over these like printed out PDFs. I'm like, I don't know, but this just feels important. It feels like there's something here. So for me, it kind of gave me a lens to visualize and see the market. And I should probably actually call out one more thing. So in the 2018 bear, really I would actually say the only person I've ever continued to subscribe to their analysis is actually the bloke who taught me everything I know about like TradFi markets, this guy, Doc Severson. So he taught me how to he's an options trader, lots and lots of experience. And he just taught me how human beings behave. And at the end of the day, my favorite kind of distillation of what the price chart is, it's just fear and greed plotted against time. It's people having great days and bad days, getting liquidated and making money. It's fear and greed. And what creates price charts, technical analysis, and on-chain data? It's the same thing. It's the 100,000-year-old hardware that sits between our ears. And people have this just emotional journey with markets and with Bitcoin, no less, because it's volatile, it's new, it's religious. People hate it. People love it. It's just got this amazing aura around it that draws people in. And the UTXO set is such a raw distillation of people making good decisions and bad decisions. We were talking just before we went on the air. At the Nashville conference, my talk was actually looking at my previous self. I went and looked at my previous buys and sells in 2018, and I compare it to a metric. I didn't put the axes on there. It doesn't matter what the metric was. It basically shows profit and loss being taken on chain. And every single time that I sold the bottom at 6K thinking, don't worry, I'll buy it back lower, it's literally where all the dumb money is selling at a loss with the exact same opinion as me. Don't worry, I'll buy it back lower. Market bounces, and then you go, oh, my favorite influencer, or look, I've just found this new RSI squared indicator. I'm going to use this. Suddenly it's bullish, and you buy the top when all the other guys are taking profit. So I can look back at my dumb 2018 self, see my behavior printed in this metric of the masses. And now in my kind of more mature years, I can look at it and go, well, are there the less mature masses out there? Absolutely. Always will be in every market. The thing is, all this on-chain data, it exists for gold. It exists for Tesla. It exists for NVIDIA. The thing is, we can't see it. All that human behavior is there. We just can't see it. The exchanges might be able to see it. The clearinghouses might be able to see it. Gold probably can't, but the dynamics are still there. So I think that we've just got a beautiful lens into how human beings behave in markets. And what is so powerful about that is that's always going to be true. Human beings will always be human beings. We will always have the hardware between our ears. We have to, like, we're always going to experience these feelings of fear, greed, wins, and losses. And really, Bitcoin just gives us a way to visualize it. And to me, that's just super powerful.
I'm glad you brought up the emotional response and aspect of Bitcoin, which is obviously a very emotional space, because I think that's what makes you so good at what you do and the work that you're doing at Checkonchain. It's not just about taking complex charts and crunching the numbers, but what you have done a really great job of is turning it into a story and relating it back to make it make sense to the plebs like me that look at a chart and say, I have no idea what's going on here. I think that's really unique, and I think it speaks to the success that you're having. How do you think about that translation process from taking raw data and zeros and ones and making it resonate with people?
Yeah, that's really been that's where I think I guess you call it specialization is. It's just helping people, like bringing it down to layman speak. And now, if you're in a building at the moment, which most of us are, you may not like this comment, but a lot of ground engineering is finger in the air. Yeah, that's about right. And the honest answer is a lot of the way I do my analysis is kind of the same. I've spent so much time looking at this data that I'll often just go through my charting suite. I'll pull up things like, oh, that's interesting. Oh, that's interesting. And I say things all the time like, do you see yourself in the data? If you're never not sure, I'll go and look at like, what is the long-term holders doing? What's their supply? Are they taking profit? Like, I get this commentary quite a lot from subscribers. They say, my gut feel, you're like Bitcoiner instinct. If you spent anywhere like more than a cycle in this market, you have this like intrinsic feeling. You know when sell-offs feel bad. You know when rallies feel overheated. You may not consciously feel it, but like when you reflect a couple of weeks later, you'll be like, yeah, that was right. It did actually feel overheated or oversold or whatever it was. And I get a lot of people saying, when I run my analysis, like, yeah, it kind of explained why I felt that way. And it's literally because we're looking at how people feel. The more in profit people are, the more you feel good. And the more you bought a big chunk recently and suddenly you're up 40%, you feel really, really good. If you buy a big chunk and it goes down a lot, suddenly you're like, oh, maybe I shouldn't do that DCA. Maybe I shouldn't do that lump sum. I'm feeling a bit sensitive. So really, it's kind of that like group think all being baked into the data. So generally speaking, and here's another really cool stat. When you look at on-chain data, that metric I was describing before about me selling the bottom and buying the top, profit and loss, that is purely on-chain data. It looks exactly the same as the funding rate on futures markets. And I've got other metrics that, again, only look at the profit and loss being locked in on-chain. It looks exactly like options implied volatility. So we've actually got all these. We're very lucky in Bitcoin. We've got the on-chain data that kind of stitches all the exchanges and the hodlers and stuff together. The exchange, the ETFs, all of that, all those flows, we can see it in the on-chain world. But then we compare it to the ETF flows. Well, what are ETF investors doing? Are they buying? Are they seeing inflows? Are they seeing outflows? Is it growing? Is it stagnating? What are we seeing in the futures market? What's the interest rate being paid? How much open interest is it growing? What's the liquidation profile? Options increase, like options have exploded. They're like 55 billion now. They now compete with futures in terms of size. We can pull information out of that too. So we're very lucky in Bitcoin. And I yes, I'm an on-chain specialist, but really I'm a Bitcoin analyst. That's my like core thing is I analyze Bitcoin. And I look at all the different market sectors because when they all speak the same language, and more often than not they do, you've got a really clean story. Like if the ETF investors are scared and the funding rates are negative and the hodlers on chain are no longer selling in profit, but the people who bought the top are selling at the bottom, that's a beautiful story that goes, hey guys, this could probably, like, what's the smart money doing? They're probably stacking sats. And what's the dumb money doing? They're capitulating and getting liquidated on the long side. Beautiful. Probably the right time to step in. So it just gives you that confidence to navigate the market.
Well, I know the audience is itching to get your thoughts on where we are right now and, what those numbers are saying. My question to kick off that discussion is a huge aspect of your research is looking at Bitcoin's performance across cycles and also across different stages within that cycle. I think most people would argue that we are in the middle of a Bitcoin cycle right now. At first, I would want to know if you agree with that. Are the signals matching consistent with that view? Do they suggest something different? Where are we at, halfway through 2025 in terms of what the on-chain data is saying? And how does that compare to maybe 12 months ago?
Yes, so the market has gone through a pretty meaningful transition since April, I would say. So we had the tariff tantrum, market sold off, Bitcoin went down to 75K. Since that point, up until then, it's been very much spot driven, very, very healthy. We've seen this kind of stair-stepping pattern higher, really, really clean, structured market behavior. As we move from April onwards, suddenly derivatives are a much larger component, right? They've exploded to like $88 billion in total open interest. And a lot of this actually isn't coming from the CME. A lot of it's coming from these like weird exchanges you've never heard about, and new ones that are popping up, very much in the degenerate crypto native landscape. So we've got a lot more of this leverage creeping in. We're seeing liquidation volume starting to increase. We've still got a lot of activity. Here's another very strange dynamic that's happening right now. If you look at the Bitcoin network, we've got a lot of volume. Like the volume of coins actually moving around is massive. In dollar terms, it's huge. And yet blocks are empty. So if you think about how that looks from a statistical standpoint, the median, which is there's lots and lots of small transactions and a handful of really big ones, there's fewer of the small transactions, there's a lot more of the big ones. Why is this happening? There's a few reasons. I think one is that a lot of the retail speculation, we've seen some moving out into the shitcoin world, but we've also seen a lot of people just punting on treasury companies. And now the treasury company premiums have all been compressing. So where I would describe we are at the moment, I would actually say we're probably later cycle if the cycle persists. And that's a really important point. We can come back to that. So if the 4-year cycle persists, we are somewhere between. I wrote a piece recently called Time in the Market, where it was basically saying like, if we just pretend that the 4-year cycle is going to carry on and we look at like since the cycle high, since the cycle low, we are somewhere between 30 and 120 days away from finding out if the 4-year cycle is broken or not, because we should top in the next quarter. And historically, Q4 is the quarter where that happens. There's going to be a lot of people who trade that self-fulfilling prophecy. There's also going to be a lot of people who go, well, what if, like, there's a lot of investors who just don't care. I think there's a really, really interesting point to say a lot of these institutions, they don't care Bitcoin traded for $10 or $100 or $1,000. Their purchase price is $52 IBIT. That's their purchase price. They don't care. They just look at their IBIT chart and it's an uptrend. So for them, their anchoring bias is very, very different to people who've been in this market for a long time. So I think that's an interesting factor. We're definitely in a more leverage driven, more speculation. You don't see bonk treasury companies in the late stage bear, right? This is
Not yet.
Close to not yet. So this is the kind of thing that you see near tops. But of course, the thing with tops is that final right tail, it's where it's the most explosive and things can move really, really quickly. So I think volatility, personally, I think volatility is mispriced. I think in the short term, one thing that has happened, and I've been writing about this for probably like 2 weeks now, 3 weeks, ETF flows have slowed down a lot, really, really slowed down, starting to get some outflows. Now, outflows historically have been fleeting events, a couple of weeks. We've not seen a sustained period of like loss of confidence style outflows. Treasury company MNAVs have all compressed towards 1, so that's taken away that bid quite meaningfully. So the two main drivers that people are looking at, the ETFs and the treasury companies, have really slowed down. And honestly, I think it's going to be hard for a lot of treasury companies to boot back that MNAV and re-expand. So suddenly I think that bid's not coming back anytime soon. There'll be a handful of big players that can play that game, but not many. So that's a bid that's gone. ETFs are a bit slower. So there's no question right now we actually have a bit of a demand problem. But what's the cure for demand problems? Lower prices, right? If the prices go lower, suddenly you start firing people up and go, oh man, you're going to give me 108K, 100K, 90K, 80K? Yeah, absolutely. Now I'm going to start selling my shares. So I don't know what price it has to go down to, but I am cautious, even though it's like we're coming off the high. Yes, we're 10% below all-time highs. It's just another day in Bitcoin. And one thing I have been talking about quite a bit, I'm trying to understand this transition between a bull and a bear, because in the 2024 period, there was a potential that we rotate into a bear, but the damage never got bad enough. When I say damage, coins in loss, unrealized losses, people who bought the top, the damage never got bad enough. So we were cautious, but we were saying, I just don't think it's over. Very much the same during the tariff tantrum. We sold down to 75. We traded around 85. And I was like, the losses just aren't bad enough. Where we are right now, same story. The losses just aren't bad enough. And when I model how low we have to go for the losses to get like bear market initiating, it's quite a bit lower. It's like 80K or thereabouts, which is also where if we were going to have a bear market right now, if we just assume we're in a bear today, that's kind of my target. That's where I think we'd probably head, somewhere between like 80 and 75. There's that strategies cost basis, ETF cost basis, average on-chain cost basis. All this stuff is like there. Beautiful. Imagine the headlines. I want to see it. So that's my kind of angle for now. We're on this like could be bear, probably isn't, but stay tuned because we've got to watch and see how things evolve from here.
Bitcoin's so funny because you talk here about like a crash down to 80K, and like
I know
people that are newer into the space are like, oh my gosh, that would be the worst thing ever. But it's the time in this space is really interesting because just within 12 months we were celebrating 80K as a new milestone, more or less. So talking about those market cycles, and I do want to hit on ETFs and the treasury companies. But since sticking on the market cycle conversation for a second, it's timely because you had a tweet today giving a bit of a different perspective on market cycles. And you talk through, in your opinion, there are three main cycles. I won't try and explain for you. I would love for you to just walk through that tweet a little bit and give us your thoughts on that 3-cycle structure.
Yes, so the classic 4-year cycle, people anchor around the halving. And the halving, I think a lot of people have come around to this idea. The halving had a much bigger impact in the early days. I actually if you just remove the halving, pretend the halving's not a part of the cycle at all, I just started looking at this strange pattern that was in every mean reversion oscillator I have, whether it's on-chain data, so the way the market oscillates around people's cost basis. You can do it with the Mayer multiple, just a ratio between price and the 200-day. Pick your moving average. And then you do an oscillator from them. We've got this interesting pattern where there's two very clear changes in structure. Up until the 2017 top, when I bought, that pre-period, I mean, really what happened in 2016-17, Bitcoin became a household name for the first time. No one really knew about it, aside from some libertarians and some cypherpunks, up until that point, right? You got a few people speculating on stuff, but really no one knew what Bitcoin was. That's when I found out about it. And you can see that in the adoption trends, lots of things changed on that 2017 top. You can look at like address growth and transaction counts and all sorts of stuff. So if you look at that phase, in my view, up until 2017, there's no derivatives, there's no stable coins, there's barely any shitcoins actually. It's basically Bitcoiners who've kind of worked out what this thing is, but the risk of it going to zero is very high. A lot of people forget that we were like $3 billion market cap at the start of that bull. $3 billion. Right? We see 3 billion in sell side on a daily basis today, and the market goes sideways. You know what I mean? Like the whole market cap, it's quite remarkable. So from that perspective, very spot driven, very organic, very retail. We barely had a trading view chart. That middle period from 2017 until FTX blew up, until 2022. And by the way, these are like approximately 4 years, but there's no reason they have to be 4 years. That middle period, that's what I would call my formative years. That's where I was trying to like work out what Bitcoin was. I'm listening to mountains and mountains of podcasts. You can actually see the education. I'll talk about this in just a second. When that FTX bottom happened, it was the first time that we saw retail holders, people with less than 1 Bitcoin in a UTXO, that 1 Bitcoin and less people, they bought the most Bitcoin that they've ever done in that window after FTX blew up. The only time that they've been even remotely close to that was the 2017 top. So think about what this means. We're at 20K on the way up. That's me buying the absolute top. People are going, oh my God, it's going to 100K, let's go. Then we have the 2021 cycle. It's boom bust. All of our oscillators are straight up, straight down, massive leverage, massive washouts. That's just like straight up. 2021, we didn't stop. And then suddenly we're down 50%. And then we're back at all-time high. Then we're down at 15K, just straight down. And suddenly shrimp go, you know what? I'm going to buy as much as I possibly can. Why? Because they've learnt that process from the 2017 top all the way through to 2022. People have been studying this thing and their conviction is through the roof. So there was a very clear shift there. Now, if we move to all of our oscillators after, from 2023 onwards, it's got a similar spot-driven pattern to 2017. Very, very organic, very natural places where it finds support, except the difference is it's a lower amplitude, but it's also oscillating much more around the mean. We used to get like violent, just like buy the dip at any cost. And this is part of a function of like how small Bitcoin was in 2016, 17. You didn't need a lot of capital to buy the dip for it to then suddenly shoot higher. Now we've got huge volumes of sell side coupled with huge volumes of institutional sized demand. So we've got really, really serious money. The fact that Bitcoin is moving even remotely similar to that like 100x smaller cycle, it's incredible. And I talk a lot about sell side pressure, and there has been a lot of it this cycle. Sell side is also a story of demand. For every seller, there's a buyer. The amount of demand we've seen this cycle, I just don't think people fully understand the magnitude. Like at the peaks in 2024, and then again in like November, December, we were seeing $55 to $80 billion per month in capital flowing in. Like, you know, this is starting to get into some of the biggest companies in the world, right? You're getting into you run that experiment over a couple of months, hundreds of billions of dollars. You know, we're getting into the top 200, 300 companies by market cap in terms of that flow. The ETFs have taken in 56 billion in net flows, and that's fresh capital coming in. So really, really serious money. And I think people just get lost. They think, why isn't this cycle performing the way it is? It's like, because we're just much bigger, but the capital rotation going on under the surface is just so unbelievably healthy.
What are you seeing in regards to sell side pressure right now, given the fact that we now have these new entrants in the space with Bitcoin treasury companies and to some extent ETFs that are creating almost a floor of buying pressure? Have you seen sell side pressure change in one direction or the other since, you know, I guess the beginning of the year, and where are we sitting today in that regard? Because at some point, to me, it's like, who is selling all of these companies, all of this Bitcoin on such a consistent basis that they can just continue to, obviously Bitcoin is a massive asset, but I want your thoughts on where we're sitting right now.
Yes, so there's been two very significant waves of sell side. The first one was the ETF rally, so 2024 when we peaked. The second one was November, December last year, which is when Saylor was buying an unbelievable amount of coin, just a huge amount. I forget the actual stats, but I think they increased their total balance by they almost doubled it, like just hundreds of thousands of coins in that 2-3 month period. Then the second wave was in the rally, really since May onwards. It was nowhere near the same magnitude as what we saw in the previous two, and it's tapering off significantly. So if I look at the current market, it is a very interesting point, because I don't think we're blasting to all-time highs anytime soon. But at the same time, I'm also not seeing the kind of loss of confidence. It actually looks like there's a lot of hodlers out there who they actually. I'll try and frame this up. I think hodlers really understand this asset a lot more than people think. And that's, again, why onchain data, I just love it. It continues to tell the story of us. And I think there's a lot of hodlers. They sold a lot on the way up. They sell into strength when the market actually has the demand. I don't think the market has the demand right now. And the sell side by hodlers is through the floor. They have absolutely slowed everything down. And they're almost just allowing the market to find its level again. So there's almost this symbiotic relationship between the hodlers who own it. They never want to nuke this thing to zero. I'm not going to, this is very much a speculation, but we saw a little while back, there was 80,000 Bitcoin that was sold, and they sold it through Galaxy. They sold all of it in a handful of days, and the market went down 3.5% and fully recovered. And this is I think it was 110K or something. The fact that the market could handle 80,000 Bitcoin, by the way, 80,000 Bitcoin is what Luna sold, and they took us from 45K down to 17. So, you know, that's kind of the magnitude of the damage that 80K used to do at a much lower price point. So the fact that the market could handle it is quite remarkable in my view. And I don't know if that was sending a signal. It could have been sending a signal saying, look how liquid and deep this market actually now is. I don't know. There's a lot of things that you could kind of speculate on there, but there's this relationship between hodlers and the asset. They don't seem to oversell this thing. And I don't see any major loss of confidence. I just think the market's got to go through whatever this demand doldrum is. And, we'll come out the end of it at some point in time. And, look, the sell side has been very interesting. It's definitely softer on this leg higher, but it's still meaningful, right? We're still getting 30, 40 billion a month at certain peaks.
We certainly have entered a new age of maturity for Bitcoin, and it's interesting to see the impacts on the market more broadly. Talking about ETFs and digital asset treasuries or Bitcoin treasury companies, whatever you want to call it. From your perspective, is that at all impacting or shaping flows and market dynamics when you're looking at on-chain metrics? Or does it not have an impact on the work that you're doing?
Yeah, so I get this question quite a lot. So how much does the ETF complex, and because, in theory, what is an ETF? It's a pool of custodied coins that there's some token, right? The stock ticker that people trade external to the Bitcoin blockchain. This is no different to literally every centralized exchange. If you deposit coins to Binance, it's exactly the same thing. It's a custodian, and then coins trade around on the inside. It's exactly the same mechanic. And the ETFs are significantly larger than the ETFs are. Spot trade volume is usually about 2 times, 3 times the ETF trade volume. So, we kind of look all these things in one place. Now, when I'm looking at on-chain data, there's a lot of ways we can cross-section these metrics, but there's really 2 key buckets. Coins that are not moving, hodled coins, and that's where you're going to get things like unrealized profit and loss. If you hear of MVRV, that's going to be the ratio of how in profit people are on the coins that are not moving. And for a bit of a context here, the daily transaction volume on Bitcoin is usually about 1% of the supply, but of that 1% of the supply, it's a lot of the same coins transacting multiple times. Now, when you look at how coins behave when they go into an exchange, exchanges are usually 60 to 80% of daily on-chain volume. That's coins going in and out. And a huge chunk of on-chain volume is just you deposit to Binance, they move it into their hot wallet, it gets withdrawn, it comes back into another exchange, and this same coin moves around like 4 or 5 times, and then finally comes to rest somewhere, either in a cold wallet or a hodler's wallet, or a trader's wallet. All of those dynamics, you can actually filter 95% of it out. I mentioned the realized cap before. You can do some of the most advanced entity clustering and all these heuristics. Many of these unspent metrics, coins describing coins that aren't moving, they barely deviate by 5% with some of the most advanced tools. On the unspent side of the equation, the ETFs actually don't change anything because we can trivially filter out all of this information. Where it is very interesting is on the spent side. So of that 1% of the supply that's constantly moving, that is where you're going to get, well, is it actually an ETF? Is it actually an exchange? But the thing is, with all the deposits, there's always going to be background noise in everything. And this is where I go back to my ground engineering. I'm designing basements and train stations with 5 boreholes that are as big as this microphone, in terms of diameter. I'm very used to dealing with incomplete information. That's what I love about it. There is always going to be background noise. There's background noise when we look at the economy. There's background noise when you look at every asset. The trick is actually knowing what is background noise and what is signal. And what we see is that old coins come back to life. They sell in profit every time the market rallies, like almost without fail. Yes, it could be people consolidating their UTXOs. It's probably people taking profit. We also see people who bought the top hodl all the way through to the bottom of the dip. And the bottom of the dip, they always capitulate and take the loss. So you've got this background noise, but then occasionally you get these signal spikes that go, there it is. That's what I'm looking for. I'm looking for this shift in behavior, a change in trend, a change in dynamic. So yes, there are going to be impacts, but these impacts have been part of the exchange complex. Like ETFs don't change the mix. They're actually exactly the same as a centralized exchange. Same for treasury companies. Is Michael Saylor correctly defined as a long-term holder? I think so, because he's holding the coins. They're not coming back to market. He's correctly defined as a long-term holder. So I actually don't think a lot of these dynamics, I've been waking up every day expecting metrics to break. And I do this every day. I'm like, which of my tools is now dead in the water? They just keep working, man. Like until they stop work, I'm just going to keep using them, right? Don't fix what ain't broken. And a lot of people try to get so in the weeds. This is another engineering, a very common problem in engineering. You can fiddle around and spend 90% of your effort on something that changes 5 or 10% of the result. Did you actually need that 5 or 10% of the result when you're basically doing a finger in the air test anyway? Like really, that's what markets are. You've got to go with your gut feel. And when I see stuff break my gut feel, I'll dive deeper. But sometimes you just don't need to, right? Sometimes you actually get close enough and that's good enough. And you'll spend 90% of your time achieving something that barely gives you a rounding error of difference.
Well, my gut feeling is after this discussion, I need to go buy some more Bitcoin because you got me feeling really bullish here.
That's a good impact, mate.
Podcast done. We're good,
Yeah, happy days. Mission accomplished.
Talking about like tracking, I know one of the metrics that you're looking at very closely, and you just mentioned it, is where investors are sitting in terms of profits and losses. I imagine to some extent that gives you an idea of where everyone is sitting, and you could potentially use that to speculate on where the price is going to go in a given cycle. Promise I'm not trying to put you on the spot here, but is that true? And if so, do you have any sort of predictions based off of that information on like what the cycles or the market's going to look like this time around?
Yeah, so let me slightly reframe it, because I think that a lot of people get stuck looking for predictions, and my subscribers will know I say this all the time. I'm like a broken record. I can't predict the future. No one can. And like there was actually a real unlock for me in my market journey, where I just realized that no one can predict the future, and you have to just accept that you don't know. But what we can do is make our decisions ahead of time. So the way I think about it, I have a plan if we go to 80K already. I've got my plan if we go to 80K. I've also got my plan if we go to 100K and if we go to 108K. I also have a plan if we go to 150, 180, and 200. So just knowing what you're going to do, because that's the tide. You can't swim against the tide. It's going to take you where it's going to take you. All you can do is choose which direction you're going to swim once you actually start getting pulled by it. So that's the way that I like to think about it. So in terms of, let's go to the upside, and then we'll do the downside. If we go to the upside, if we get to about 150, what we can look at is everyone's cost basis. And if we know that every time the average Bitcoiner is up 300%, 400%, they start selling, we can now impute and say, well, if they get back to that level, what's the bet they're going to start cashing out? And for a bit of a sense of scale here, exactly. For a bit of a sense of scale, long-term holders currently are sitting on $1.3 trillion in unrealized profit. 1.3 trillion. The market cap is 2.3 trillion. So there's like $1 trillion cost basis. That's the realized cap. Long-term holders are sitting on like 1.3 trillion in paper wealth. And this is why a 10% correction just doesn't matter, because you're still up. You're still massively up, and you just don't care. They're also that cohort who bought the... I went back. I've got these heat maps that show where people accumulated supply based on the price. There's this pool of people who bought the FTX bottom. There's a stack of UTXOs there that haven't moved. It's like one of the densest zones we still have in past history. So there's even some guys who hold from the 2018 bottom, right? You can see this like dense cluster of people who bought at 3K, and they're just sitting tight. So these folks are sitting on just tremendous profits. If we go to the upside, 150 is where things start to get a little bit hairy. 130, I suspect the selling really will start ramping up. 150, we're getting into like 10% of all trading days. See mean reversion models get to those levels. 10% is non-trivial. We can keep going at 10%. Once you get to 180, now we're in pretty rare air. That's, less than 5% of all days have been there. There are some models you can project that get up above like 240K, but we're talking about on like an unsustainable wick. So it's not part of my base case. So look, I think 150, personally, I think the market has done enough capital absorption. I wrote a piece probably 6 months ago where I looked at how much capital I thought had to come in to achieve a 150 price. And honestly, I think we're kind of there. So I actually think 150 is justified. But again, that's just where people are going to start selling. So that's where behavior shifts, not necessarily a prediction. Now, on the downside, this is much more interesting because we may be testing some of these waters soon if the market keeps going lower. 108K is important because that's the short-term cost basis. And so far, it's where we've found support. Usually speaking, until we're below the short-term cost basis, I'm okay to be bullish. Like structurally speaking, every single bullish market ever in Bitcoin's history is above the short-term cost basis. Makes sense. People who bought recently are suddenly in profit. Natural behavior. So until we get below 110, I'm cautious, but that's because I've spent enough time in the data to kind of see that demand just isn't there. So my odds are we probably do go below it. But so far it's holding. And until we go below it, I'm very happy to remain a structural bull. In this cycle, we mentioned before that we've had a bit more of like a mean reversion, like this. It's got a different pattern in the oscillators. We've actually traded below the short-term cost basis much more than we have in previous cycles. We used to find support on it in 2017. Now we go 10%, 20% below it, and that's actually quite normal. We did it in 24, we did it in 25. It would make sense actually to go a bit lower. But there's a band of supply that people accumulate between 110 and 90. That zone is without question the densest. There's something like 40% of all the dollars that have ever been invested in Bitcoin are in that pocket. It's a massive, massive sum. So yes, it's tremendous. Something like 60% is above 90K in total. So there's a huge cluster there. So yeah, it's everything. Just pure, where did the UTXOs last transact? So if we look at that dense cluster, the short-term cost base is literally on the top of it. So if we now think about what a bear case scenario would look like, we come down, we touch the short-term cost basis, we don't find support, we dip below it, suddenly you've got more than half of all short-term holders going, I'm not overly pleased about this. If you get down to 90K, suddenly all that band, they're suddenly underwater, and your unrealized losses can spike very, very quickly. That's the kind of thing where the market can just go, where are the bulls? Come on, where are you? Like, what's going on? And suddenly your confidence can shift very quickly. So I'm certainly watching for that zone. However, my base case is it's been a demand cluster in the past. It should be a demand cluster in the future. And then if we go below that, you're like, okay, now we're probably in a bear market. Well, how low can we go? I almost want to see the headlines. Michael Saylor about to be liquidated. His cost base like 78 or 80K. IBIT holders underwater. There's a 79K. There's a model I use called the true market mean, which is the average for on-chain, for literally all Bitcoiners. That level is about 77K. So you can imagine the price coming back down to that 2024 zone. The world and the sky will be falling in, and I will be finding as much cash as I possibly can, because to me, that is where I suspect if we were to have a bear market, that's where I think we start to bottom out. Again, I can't predict that that's going to happen, but that's my decision framework if some of these events were to play out.
Well, I appreciate you humoring me on that question, because I know it's probably not one of your favorites, but I think you answered it very well in terms of just walking through your analysis. The reality is no one can predict the future, even someone as brilliant as you. And the easy solution here is buy Bitcoin and hold it for the long term, and you don't need to worry about the ups or the downs. But I know a lot of our audience is interested in that.
Well, the other thing is it just helps people think about things. Like, don't predict. Make your decisions. The only thing you can control.
And mentally prepare for both situations so that you can be ready in either way. Absolutely.
That's exactly right. And when part of the reason why I write the way that I do, and I talk through these concepts the way I do, is I reflected quite a lot on my own hodler's journey. And the worst actual feeling is not buying the top. It's buying the top and then being surprised that it sold off, or selling the bottom and then being surprised that it bounced. And the reason that I try to analyze the way that I do is I don't want people to be surprised. I want to remove that deer in the headlights type behavior. In 25, when we sold off down to 75K, again, it wasn't a prediction, but I said, guys, there's like an air pocket between 86 and 75. In November, there was basically no coins that transacted there on the way up. And I'm like, markets have this thing where they just want to test your patience. They want to find max pain. Be prepared in case we go to 75. It just looks like a zone that the market wants to go and find out. And again, not predicting this was going to happen, but I was talking about this in December. And then when it happens, you're like, okay, wow, but I've already like acclimatized myself. I was kind of ready for 75. And then I knew exactly what to do, which was buy when it goes to 75, because I made that decision when we're up at 100.
I know you have a lot of experience trading derivatives on spot futures. Do you also research derivatives of like the Bitcoin proxies, like the ETFs and the Bitcoin treasury companies, or are you really focused on spot Bitcoin?
Yeah, my most of my focus is on Bitcoin. So I've got a huge suite of derivative metrics I look at for Bitcoin options and futures. I've certainly paid my dues, lost a bunch of money with derivatives, but also made a bunch. So it's one of the, I don't actually trade. People ask me this all the time. Do I trade? I don't. And it's not because I can't. It's because I really just hate it. I just really hate the experience of trading. I find it takes so much of my mental capacity, and I don't find it rewarding. What I do find rewarding is like just solving the puzzle. To me, markets is just a big puzzle. And like that to me is what really gets me up in the morning. So, from that perspective, if we look at the derivatives market, I mean, really MSTR is probably the only options market that's kind of, I would think, relevant next to Bitcoin. But even then, I think we can look at just a lot of the way that MSTR trades. There's no question that whether it's cash and carry trades, which is where people long the ETF and short the futures, this has been a very, very important and significant part of this market cycle. If you overlay ETF inflows or outflows with CME open interest changes, they move in tandem most of the time. There's been a couple of pockets where it's actually just like more spot demand for the ETFs, but when you're getting inflows at the same rate as CME futures are increasing, you've probably got a lot of this cash and carry, short the future, long the spot. And then on the unwind side, where we sometimes get some pressure on the market, the ETFs do not trade the same volume as the futures. So if you're long ETF, short future, for you, you don't care. You don't care where the price goes. You're price neutral. But usually speaking, they start to unwind their positions like in April and March, where their risk manager taps them on the shoulder and goes, risk off the book right now. When that happens, they have to sell the ETF and buy back the future. Buying back the future in a more liquid market is fine. The market just takes it. But if you're selling an ETF at the time when it's already seeing outflows and there's less buy-side demand because it's a downtrend, that can actually be more pressure. So it's neutral for the trader, but in the entry and exit, it's bullish on the way in, by the way, because they have to buy the ETF, but it's bearish on the outflow. So for the market, you get these hits on either direction. But even so, we've barely gone down 30%, which is, again, remarkable. And the volatility profile for Bitcoin has compressed a lot. Probably one of the most interesting dynamics of this cycle. Very, very hard to fully pinpoint and understand why this is going on, but a meaningful part of it has to be the options market. Since November 24, IBIT has been ripping ahead. If you actually look at the ETF inflows for all of the other ETFs, they're flat since January. IBIT is now the ETF complex. It is like 57% of the AUM. When did that divergence happen? November 2024, when the options went live for it. Options tend to be a winner-take-all market. No one wants to trade the second most liquid options market. So what happens is when the market rallies, TradFi guys, they've traded prices before. They know how price moves. They also know that markets do not go up or down in a straight line. So once it's gone up a lot, they're going to start selling calls. When it starts selling off, they're going to start selling puts. They're going to start collecting income and doing these volatility capture strategies. I think that's a big part of why we've got a lot more of this chop solidation going on. Options just on like Deribit, which is like a crypto native, I guess you could call it, exchange, all-time high. Just absolutely mooning in terms of volume and open interest this cycle, and continues to do so as we speak. So there's been a lot more of this derivative dynamic coming in. But I think the really important thing I want listeners to take away from this, you will hear thousands and thousands of people commenting saying paper Bitcoin, paper Bitcoin, paper Bitcoin. When you see derivatives, particularly options, increasing, that is insurance. That is an insurance market. There are speculators there, and there are entities like capital managers. If you want to put a $10 million position on, if you can hedge $10 million worth of risk in the option space easily, you might up that to 20 million or 50 million because you know you can hedge your risk. And every time it rallies, you can say, well, I want to actually buy insurance below it. So now you're not going to suffer the drawdowns if they happen. People don't really, if you don't crash your car, you don't go back to the insurance provider and say, hey, man, give me back my premium. This is part of their cost of doing business. The bigger and the more liquid and the deeper that the options market is, the more money big money managers can actually allocate to Bitcoin because they can then hedge big risk. So yes, paper Bitcoin is like there's all this, bucket shops and people trading derivatives. Like, yeah, but without institutional derivatives, you can't really have the big money coming in the first place. And these things work hand in hand. So I think it's a really important takeaway.
So that's the good. What is the bad when it comes to leverage in the futures and options markets? Are there any red flags that you are either seeing or trying to keep your eyes out for in that sector?
Absolutely. Oh, no question. So this is the fun stuff. So there's no question that we are seeing a lot more degenerate speculative leverage in the space, without question. So it should actually increase volatility because you get people getting liquidated, you get sharp moves. In fact, the move from 110 to 124 was almost entirely a short squeeze, in my view. We saw I was writing about it at the time, I was like, I am looking at this data and going, guys, this market's going up. This market wants to go higher. And then you look at the amount of shorts. It was some of the biggest short interest we've seen in a long time. It's like, and they're hovering right above the all-time high, and it went all the way to 120. Guys, if you guys get tapped, it's just going to zip straight through. And of course, that's what it did. Not a prediction, but just like an observation that there's a lot of people who think this is a double top, and they're trying to short this thing into oblivion. Good luck with that. So you can see the volatility come out in both directions. Now, I had a meeting with, I won't name him, but a meeting with a famous macro investor. And it was a great conversation. And he was basically saying, when you start seeing, like, he can't make money in Bitcoin really, trading derivatives and trading excess risk. He goes, because it's always just been hodlers who, like, they'll go down with the ship. They'll take an 80% drawdown. So I don't want to write
rational thinking.
Like, yeah, totally. He's like, the difference is when hodlers and, like, real people put their money on the line, it's their hard-earned savings. They had to actually earn that capital. It has some meaning to them. When Wall Street steps in and the banks start stepping in, they are trading someone else's money with a bailout behind them on leverage. They don't care. So he goes, now that the big banks are starting to come in, you'll get them making some silly bets. It will happen every so often. They'll make some edge case bets. They'll sell too many call options. They'll sell too many put options, whatever it is. And then the market will take them to task. Suddenly, the volatility profile, like, yes, it compresses in the immediate term, but there can be these moments where things just go bananas and people just end up on the wrong side of the wrong trade in too much size.
Bananas in either direction,
really explode.
Right?
Totally. So I don't think we're there yet, but we're certainly seeing the crypto native speculation growing a lot. But at some point in the future, we will see the banks really make a mistake on this asset, and it's going to be fireworks.
Is there a specific metric or on-chain, data point that you're looking to try and identify that?
No, look, it's very much just watching how. I mean, specific. I would say the IBIT options is probably where you're going to see these kind of things. And again, this is something that's kind of hard to track, but you will start seeing the open interest just going through the roof. You'll start seeing too much. Too many calls, too many puts, whatever it is, you'll start seeing these dynamics playing out. Tricky to actually spot these things, because actually one thing I found very interesting is that it's hard to get TradFi data. It's actually really hard to just get market cap data historically. Like, there's so many data providers who have either really bad data feeds, or it's behind insane institutional paywalls. We are so fortunate in Bitcoin that we can pull data from so many places, and it costs almost nothing. The marginal cost is zero, which is really quite remarkable. We're very lucky there.
Fascinating stuff. It's so interesting. Just, this is a completely new world for me. So I'm really, I value your expertise and your insights here. I'm kind of making up this segment on the spot here, but I have a couple of rapid fire questions that I want to throw out to you, specifically related to metrics. And, it doesn't have to be a one-word answer, but, I'd be curious. The first one here is if you had to pick just one chart that you think is most important right now, or the one that gets you most excited, and excited could be good or bad, right? In this space, but the one that makes, your spidey senses tingle, what is that chart, and why?
Let me give a couple of answers to that, because there's different tools for different jobs. Realized cap hitting $1 trillion is awesome. From like a fundamental hodler perspective, we have entrusted this thing with $1 trillion of our hard-earned money, and it's looking after it. First and foremost, super cool, the ultimate adoption metric. If we're thinking about like why I'm actually kind of not that bearish, unrealized losses. There's just none of them. There's none of them. So it's really hard for me to be too concerned when no one's actually concerned. No one's got a red portfolio. So that's a good sign. And if I had to take, I say two, but if I had to take two metrics to a desert island,
yes,
it would be short-term holder MVRV. It's the unrealized profit and loss for people who recently bought. And SOPA, short-term SOPA, which is their realized profit and loss. So these are just oscillators showing me how good are people feeling and how many of them are acting on that feeling. How bad are they feeling and how many of them are scared and capitulating. Those two describe, they are funding rate. They are the core of how the market trades. It's great.
It's a much better way to frame that question. Hey, if you're stuck on the desert island, at least you have your charts with you. All right, this one certainly for someone like me who doesn't have any experience on on-chain metrics. As a retail investor, if I were to focus on one chart or one metric to learn and dip my toes into the on-chain waters, where should I start?
Short-term MVRV, short-term SOPA. So to start there, you've got to understand realized cap, which is basically just how we price stamp coins. As you understand how we price stamp coins from a data perspective, then you can go, okay, now I can see people's cost basis. Once you can see people's cost basis, the higher or lower prices above it, that's their incentive. That's what's going to cause them to make a decision. And then you go and say, are they making that decision that I inferred? That's the sequence. And if you can get your head around that, you can do that for the whole market. You can do it for long-term holders. You can do it for short-term holders. You can do it for anyone, but that's basically as complex as it needs to be. Show me the incentive and I'll show you the result. That's all it is.
My next one is if you had a wish list of like a metric or a piece of information in the market that you don't have right now, is there something that like, and maybe it doesn't even exist, but like, is there a metric that you would wish to have that you don't right now that you want to be looking at?
I would love to see more. I would actually love to see all of these metrics for every other asset. And one day, here's a speculation. One day, the NASDAQ or New York Stock Exchange or one of these entities is going to work this out, that they have access to the UTXO set for NVIDIA and Tesla and name your stock. Somewhere in the world, there is a UTXO set equivalent for the gold market. Somewhere out there, there is this information. And when these entities work out that they can produce realized cap, SOPA, MVRV, cost bases, hodl waves, when they work out that they can build these things for all of these metrics, whoever's out there that's listening to this, there's a mountain of money there. I've already seen what you guys charge for all this data, right? You'll be able to charge whatever you want. Just make sure you give me a free license for the IP.
The real solution there is just hire Checkmate to come in and do it all for you.
Well, see, there's a bit of a problem there because I work for myself now, and I kind of like it, and that's
not so bad.
The table, not happening.
Yeah, you're staying in Australia for the long term.
Yeah, I mean, look, people tell me to leave all the time. Look, we get taxed to high heaven, but at the same time, I look around the world and it's like it's one of the best places in the world with all of its flaws. Yes, we've got some monkeys running the show, but so does everyone, right? Yes, it's got some problems, but it's a safe and happy life. So, in many ways, there's 8 billion odd people I think would rather live here.
What's the Bitcoin community like over in Australia? I actually speak with clients all the time. I feel like there's something in the water in Australia. It's like if I'm speaking with someone that's setting up time to speak with us from Australia, and I guess I should point out, Unchained isn't currently servicing clients internationally, but we were for a period of time. But they were just like super orange-pilled, freedom, sovereignty. Shed some light on like the Australian Bitcoin community and where that's at right now.
Yeah, it's like one big functional family. Basically, we've got a handful of events that have really been the glue. For me in Sydney, the Sydney Bitcoin event, which we do once a month. JP, if you're listening, mate, you've done an absolute tremendous job at stitching this community together and just keeping it together. I mean, there's a lot of people involved there, but he certainly put a lot of work in. So the Sydney meetup has been a real epicenter, I think. But we also have a really, really special event. There's two of them. One is the Bitcoin Alive conference, which happens once a year. If you are going to come to Australia and you want to align with the Bitcoin conference, come to the Bitcoin Alive conference, which is in March. Really, really good event. One of those, like my preferred conference, I don't really like the big 50,000 people venues. I like the 300, 400 people, tight knit, and you get to actually meet people. It's one of those. Really, really good stuff. And then we have the Bitcoin Bush Bash, which is like an informal conference. So we do 4 times a year. Australia is a big place and it's hard for us to get elsewhere in the world. So what we do is we move around all different regional communities around Australia. One's in Perth, Queensland, New South Wales, and then Victoria. And, we try to position these things. So it's like, it's a bit of a trip, but also they're really, really good. There's no tickets. You just show up. And we do little presentations, and it's like a 3-day conference with barbecues and beers. It's great. So I just think that we've got a really strong Bitcoin only, and that's the real crux here. These are Bitcoin only events. They are explicitly Bitcoin only events, and they are consciously Bitcoin only events because we want to make sure the signal is there. And yeah, it's literally like this family that just moves around Australia and catches up several times a year. It's great.
Oh, that's awesome. Hopefully I can make it out there for that Bitcoin Alive conference next year. That sounds amazing. And yeah, every conversation I've ever had with an Australian Bitcoiner, I've walked away feeling like they're doing all right over there. And that certainly has continued because I'm feeling very bullish after the conversation today. In closing, I'd love to end with a question looking towards the future a little bit. Where do you see on-chain analytics going from here? Looking ahead, I'd be curious, where we're at in the maturity of on-chain analytics, how that could potentially impact Bitcoin's adoption or growth long term, and just what the future holds for Checkonchain and what you guys are going to focus on.
Yeah, so I get a lot of people ask me sporadically saying, "Isn't this known information and therefore isn't it all priced in?" And I've worked at
AI do this.
Yeah, I've and maybe I've worked at a data company and tried to explain this to quants and money managers and whatever else. I've spoken to many people in my time about this, and let me assure you of one thing. This is a niche of a niche of a niche of a niche. This is like there's very, very few people paying attention to this. Maybe one day. But it's not even part of my base case of anything coming soon. The AI thing is actually really interesting because I've used AI here and there. I'm certainly not a prolific user of it. I certainly use it here and there just to speed up coding for my charts and things. I don't use AI at all in my process. I don't use it in my, I use it for like advanced search, go and compile MSTR's balance sheet or, filter through these filings. But I don't use it for my analysis. I don't use it for my videos. I don't use it for my writing. I don't use it for spell checks. I don't use it for anything there. And yeah, I probably could, but I love the writing process. I love the thinking process. That's actually why I do this, because I love the thinking and trying to solve the puzzle. I like being wrong because then I've got to try and correct my course, and I like writing for people because there's literally infinite AI slop, and there's like something human about reading someone's opinions and views as they evolve. And I'll put out ideas. I'm like, I'm kind of halfway through this idea. Now I'm starting to form it, and I'll iterate on it over time, and I'll test it in the wild and see how it goes. So that part of my process is my favorite bit. That's what I wake up for. So it's going to be interesting because there's going to be a lot of AI content, and it's going to get better and better and better, and people won't know the difference between it. But AI didn't buy the top like I did, right? AI hasn't had this experience of listening to Pete's podcast. AI hasn't had the experience of blowing up their options account 3 times. AI doesn't have these human experiences. And for me, I think that actually, that's why I'm actually not concerned. I saw a great tweet a little while back that said, if you're concerned about your job being taken by AI, you probably should be, right? I don't think about it at all. I really just don't think, because I think that what I'm doing is a human product. It's a human thing. And I've had some people debate me and say, oh, no, there's no chance. I think AI is going to take it over. And some people want slop. I'm like, yeah, some people, right? But that TAM of people who actually want real insight and real thought and human creativity, that's really the TAM that I look after, right? If you want AI slop, there's plenty of it, but that's not really my thing. So I think it's a really interesting topic and an idea that, yes, in theory, could impact the business, but yeah, I'm not concerned about it.
I love that take on it. And, one man's opinion, I don't care how smart AI gets, there's no replacing Checkmate. So anything you're working on right now, you can share with the audience in terms of looking ahead here?
Yes, mate. I think we've got a report coming out hopefully very soon, which will be a bit of a snapshot on what's going on. I mean, again, we've got so much amazing data for Bitcoin across all these market sectors. I'm thinking really, really nice big charts, clean insights, and just help people understand how this market is evolving, what's different, how it's changing, how it's evolving, how I see the world. Really looking forward to it. So that'll be coming out in the next couple of months.
Excellent. Well, James, thanks again for your time today, for all your insights and for what you do for the space. Hopefully we can do this next conversation in person in your homeland. And until then, appreciate the time and hope you have a good rest of the week.
Good on you, mate. Thanks for having me on.